Looking at the significant rise in the bond yields, just wanted to know how is your expectation in 2018 for the performance of the bonds?
Though it's very difficult to guess when the bearish phase is likely to get over, because we are pretty much at the peak of the bearish phase, but it's difficult to guess how more the pain could be. It could be today, tomorrow, or any time down the line, but it all depends on how the all other factors and variables behave in the time to come.
Okay, all right. So coming to the corporates, how do you see the corporates borrowing cost for this year in 2018?
So the borrowing cost obviously has gone up in 2000 compared to 2017, where most of the corporates were borrowing in the range of 7 quarter levels. It's almost about 8 quarter levels now. And the curve has become a lot more steeper because there has not been a rate action on the shorter end side. So short-term rates are still at an attractive level. It's just the March phenomena where the rates have inched up a little bit, but the short-term rates are closer to 7%, whereas the longer-term rates are 8 quarters. So there is a steepness in the curve, and that's the reason we see a lot of corporates comfortable coming to the bond market or borrowing through the CP routes and all, rather than getting to the bank financing and all. Bank financing is at a PLR base rate or MCLR rate and all. So none of the banks can lend to the corporates at lower than their MCLR or base rate. So and the capital market, especially the bond market, has been quite efficient in terms of giving them the better pricing, and it's always better to borrow from the bond market. Most of the corporates get 100 to 150 basis point rate advantage for that, and we see the volume wise the corporate bonds have been growing steadily over the last couple of years. Earlier it used to be about 20% financing in the credit space by the bond market and 80% by the loan route. Now the things are changing, and slowly it's inching up towards, it has already become 30% to the bond route and 70% by the bank credit. The credit is going very slowly, while the bond issuances are growing in the high double-digit levels.
And coming to the overseas investors, this year we have seen already that in this week there has been a great outflow. So what is your take in the coming months for the rest of the year?
I don't think so. FIIs are bearish in the market. See, we have seen a healthy flow coming from the FII. Right now there is a countrywide limit in terms of how much FII or how much FII's participation in the bond market should be. So if you see, the limits are almost taken up, and most of these GSEC limits and corporate bond limits are available only through the auction route, in spite of regular hikes in the limit by the central bankers and the ministry all the way. That clearly tells us that the FIIs are comfortable. The rates are, they have belief in the Indian economy. They have kind of bullish outlook. The rates being attractive now, and the more to do is with the currency. The currency has been quite stable of late. Yesterday there has been some kind of a rupee weakening, but we have seen those currency to be a very comforting zone for the FIIs, and the growth outlook will keep them bullish about the.
And the last question, we'll speak about the liquidity for the banking system. How do you see the liquidity positions, as the RBI's target for this year is neutral, being in the neutral stance with a positive territory? So what is your take on that?
I think RBI is committed about the liquidity aspect, and their belief is that they want to be on the neutral on the liquidity side. Due to the last year's demonetization, there has been a throughout the year surplus liquidity, and now it's very close to the neutral, barring a 1 or 2 instances where the liquidity was in the deficit mode. But the quick action from the central banker in terms of injecting the liquidity into the system and all. So there are enough tools available to central bank in terms of managing the liquidity very efficiently. Gone are the days when the call rate used to spike irrationally. Now there has been quite a lot of stability, and that's what is comforting. So there is not going to be a huge challenge about the liquidity in the coming year.
Thank you so much, sir.